We note that Dow Jones and Nasdaq seems to have stabilized in the past week, while the S&P 500 seems to continue to be on the rise, yet we note some difficulty for the index to reach higher highs. In the current report, we aim to shed light on the fundamentals for US equity markets as a whole, but also particular issues for the specific high-profile companies or sectors, and for a rounder view, end the report with a technical analysis of the Nasdaq. Equities markets focus now turn to the Fed's interest rate decision in the late American session today. The bank is expected to remain on hold, keeping rates at 5.25 to 5.50% range. Currently, Fed fund futures imply a probability of 99% for such a scenario to materialize, rendering the interest rate decision largely as an open and shut case. Hence, we may see the market attention turning to the accompanying statement, the new dot plot, and Fed Chairman Powell's press conference half an hour later. FFF also imply that the market currently expects the bank to start cutting rates in June and deliver 3 rate cuts in total. From an equities perspective, we tend to expect that any hawkish elements could weigh on US equities as stocks are considered riskier assets as the market sentiment may turn more cautious. The market's AI frenzy seems to have been re-energized on Monday after NVIDIA organizing its first GTC conference on Monday. The conference had as a protagonist the company's next-generation chip, practically revealing the possibilities the technology promises. According to Financial Times, the company's CEO Jensen Huang stated that NVIDIA's Blackwell graphics processing units would massively increase the computing power, driving large language models. It should be noted that NVIDIA's share price had started to stabilize over the week after a substantial rally since the start of the year. We expect that the event could provide a new push and allow NVIDIA to capitalize on the gains. Overall, despite the share's price being at record high and prone for a possible correction lower, we still have a positive outlook on a fundamental basis. Staying in the tech sector, we noted that Apple's share price seems to have taken a slight upwards trajectory in the past 2 weeks. Yet we tend to maintain our worries for the reduced revenue of Apple stemming from China. It should be noted that Apple seems to be getting increased competition from Chinese companies, while at the same time there is an adverse business environment for Apple over there over the past 6 months. Also, we note that Apple has approached and is in discussions with Google in an effort to jointly develop artificial technology. Overall, the possibility of Apple expanding substantially in AI could provide some support for its share price given the AI frenzy of the market. Nasdaq on a technical level seems to have stabilized its price action in the corridor set by the 14,685 and the 17,120 levels. Given also that the RSI indicator remains near the reading of 50, implying a rather indecisive market, we tend to maintain our bias for the sideways motion to be maintained. In addition to the above, we also note the narrowing of the Bollinger Bands, which tends to imply lower volatility that could allow the sideways motion to continue. For a bullish outlook, we would require the index to break the 17,685 resistance line, with the next possible target for the bulls being the 17,300 resistance level. Should the bears take over, we may see the index breaking the 17,120 support line, aiming for the 16,570 support base. Those were the top financial stories for this hour. We are here to keep you informed. From all of us here at Iron FX, we wish you solid trading.